If you want to make money in the stock market, the first thing you need to change is your mindset. Most people don't lose because of the numbers, but because they make decisions based on their emotions. In this video, we will easily understand the psychology of the stock market. First, why is psychology the most important thing in the stock market? Second, how do feelings work in the stock market? Third, how do successful investors think? And fourth, how to become a smart investor. If you watch this entire video, you will understand that just by changing your mindset, you can earn millions in the stock market. So let's begin. Why is psychology the most important thing in the stock market? The stock market is not a magic wand where you invest once and become a millionaire in a few days. It's a mind game where your feelings play the biggest role. How do feelings work in the stock market? Greed, the desire to get rich quickly. Most people enter the stock market with the idea of making money fast. They believe that if they take more risks, they will get more returns. Example, Ram bought a stock for 1,000 rupees. In a few days, its price increased to 1,200 rupees. Ram thought it would go up further, so he invested more money. But suddenly, the stock fell to 800 rupees. Ram panicked and sold all the shares at a loss. What was the mistake? Ram took too much risk because of greed. He invested more money without thinking. When the market fell, he couldn't be patient. Lesson: there are no shortcuts to getting rich in the stock market. Only smart investors make money, not those who act on their emotions. Fear, panicking when the market falls. Fear is the biggest enemy of the stock market. Many people panic at the sight of small losses and sell their shares very quickly. But if they had patience, they could have made a big profit later. Example, Shyam bought a stock for 500 rupees, but in a few days, its price dropped to 450 rupees. He sold it out of fear. But a few weeks later, the same stock rose to 700 rupees. What was the mistake? Shyam sold the stock without thinking long-term. He didn't understand that market fluctuations are normal. He let fear dominate his decision. Lesson: the stock market always goes up and down, but only those who are patient win. How do successful investors think? If you look at investors like Warren Buffett, Rakesh Jhunjhunwala, or Radhakishan Damani, what was their biggest strength? They had patience. They stayed away from greed and fear. They understood the market and invested long-term. Invest long-term. The best way to be successful in the stock market is long-term investment. If you buy good shares and hold them for 5 to 10 years, you can get great returns. Increase your knowledge. Investing without knowledge is like gambling. If you research properly and choose good companies, you will make good profits. Control your feelings. Stay away from fear and greed. If the market falls, don't panic. Smart investors are those who are patient and wait for the right time. 3 master rules of stock market psychology. Never sell stocks in panic. Invest long-term in good stocks. Don't take too much risk for quick money. Remember, the winner in the stock market is not the smartest person, but the one who is most patient. Final mantra: money comes later, the right mindset comes first. If you want to make money in the stock market, the first thing you need to fix is your mindset. Numbers don't matter, your psychology matters. Follow for more investment tips like these and comment below. See you soon with a new interesting topic. Take care of yourself and be careful with your investments.